Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Well, another week has gone by with more unprecedented events. This time it's been the turn of the oil market that has seen something that never happened before, which is the front end contract, the May contract, selling off and going actually negative at some point, which just shows that no one really wants to have any delivery in oil, given there's just no storage left out there. So there's a big oversupply. Obviously, we have bounced a little bit off those lows, but the overall problem will definitely be back, given that the massive drop in demand from the current COVID-19 crisis. And so that just means we need to see more production cut in order to actually solve the issue, at least temporarily. Right now, the world is running out of storage space for oil. So there's only one way oil will be going in the short term, really. On the data front, we see more real horrific numbers from across the world, really. It was PMI day yesterday, PMIs from Japan, Australia, Europe, UK, and the US, and it just looked all about the same, which is just horrible. Which just brings me back to the story I keep on talking about, the complacement in the market based on all the activities from the Fed, the ECB, possibly from the BOJ next week. But reality is, if you look at the data, they are not really V-shaped territory. There are no recessionary territory. They're really more sort of, hint towards depression type of data. And the recovery will just take a lot more time than people actually think at this point. Again, I'm going to show you a few slides from the data, some of the markets, which the first slide is going to be the European PMI. Here we just have Germany and France, which were the two new ones yesterday. And I think it's, this is the service PMI. It pretty much speaks for itself. I don't think there is much more words that we need to use. And again, I could have chosen data from anywhere in the world this time, because I usually show US data. I just thought like maybe it's time to show some European ones. On the next slide, we have the UK retail sales, which came out this morning, the biggest monthly drop on record. Obviously, it's no surprise, you will say, which is obviously true, given there is the high street is closed, but it still shows the magnitude of the data that we see is just extraordinary, and that's why I do feel a V shape is just not really in place. On the next slide, this slide I showed once before, I just thought I'd bring it back because this is really the key in terms of how long the lockdown is lasting. This is about cash flow. This is from the US, but I'm sure it's pretty similar elsewhere, where you just see how long people or businesses think they survive while being shut. So if you just add less than a month and 1 to 2 months together, that's like 50%. So really there's a big worry that once we do open up again, how many businesses are actually going to be opening up again and how many will actually just fail. On the next slide, we have the Dow. This is still my big sort of area, 24,176 Fibonacci level. We did break it a little bit this week, but have failed to close above. So 24,200 to 24,580 is where I think stock's going to run out of steam. I do expect the Dow to come back to 22,500 and eventually back to 2,800, because I think the market will sooner or later realize that the data, the difference between the economy and Wall Street or equity markets just cannot be as large as it currently is. Yes, I get it. Central banks are doing a lot, government is doing a lot, but reality is they do a lot in order for things not to fall off a cliff. Last but not least, we have the dollar index. Kind of flip-flops around this 100.15 level. That's the key level that we've been looking at for quite some time now. We had a lot of flip-flop in this week as well as last week. Right now, it looks again, once we stay above that level, there's a chance for more dollar strength. Dollar emerging markets are quite a bit as well, weak EM as well. So if we don't want to have more pain out there, the dollar index has to come back below 100, and maybe the dollar has to sort of come off just to ease some of the broader tension out there in emerging markets as well. Sadly, not a lot of good news, but let's just see what next week's brings. Have a good weekend. Thanks very much indeed. Bye-bye.